Make a start. Good morning from London, or good afternoon, or good evening, if that's where you are in the world. Welcome to our webinar, Delivering Central Bank Digital Currencies, CBDCs, Exploring the Technology Challenge. My name's Ian Hall. I'm editor of Global Government FinTech, a sister title to Global Government Forum. Both our publications report on trends and innovation in the public sector to serve our core audience of civil servants around the world. Most central banks are researching or experimenting with central bank digital currencies. Examples include China's journey towards a digital currency, and the Bahamas launched 6 months ago of its sand dollar. Here in Europe, the European Central Bank is due to decide whether to step up its CBDC technology explorations in the next couple of months. At the start of this week, here in the UK, the Bank of England and the Treasury announced they were setting up a CBDC task force to coordinate the exploration of a potential digital pound. The Bank of England has also created a CBDC engagement forum and a CBDC technology forum, so splitting out the all-important technical considerations. Today's webinar will seek to do the same, examining the different technological solutions. Focusing on retail or general purpose CBDCs, central bank digital currencies that are issued to the public, our panel are going to address these 4 questions. What are the main technological considerations for those exploring CBDCs? Are the technologies available, blockchain and centralized databases, capable of rising to the challenge of delivering CBDCs? How do ambitions for enhanced features such as programmability, programmable money, and offline use impact on the tech questions? And how can CBDC's design help deliver real benefits for citizens and national economies? We'll begin with short opening remarks from our four panelists, but we aim to save about half the time for questions from you, our worldwide audience. When you have a question, just click on the Q&A button at the bottom of Zoom and type it in. Please add a note if you don't want me to use your name if I ask your question. Today's event is kindly supported by our knowledge partner, AWS, whose support enables us to offer this webinar free to public servants. Please note the webinar is being recorded for later circulation, and we have 2 hashtags, which are hashtag CBDC and hashtag CBDC Tech. So, briefly onto our panel. We'll hear first from Seirei Shirai, Professor of Economics at Keio University in Japan. Professor Shirai was a member of the Bank of Japan's Policy Board from 2011 to 2016 and is a visiting scholar to the Asian Development Bank Institute until last year. Professor Shirai is the author of numerous books and papers on subjects including CBDC. John Velisarius is a managing director in Accenture's tech consulting workforce. Originally from Canada, John is the company's global blockchain and multi-party systems lead with responsibilities including CBDCs. John is based in London and leads several blockchain engagements with global organizations and central banks. Next up, we have David Mckeefe, who is Principal Business Development Manager at Amazon Web Services across EMEA. Prior to AWS, David worked on major IT transformation projects in the City of London as a commercial transaction lawyer. Last but not least, we have Alistair Milne, who is Professor of Financial Economics at Loughborough University in the UK. Alistair has previously worked for organisations including the Bank of England, the Treasury, and the Government of Malawi. He's currently doing a lot of work on CBDCs with an ongoing project for the Swift Institute on CBDC and international payments. So let's make a start, and let's first of all go to Tokyo. So over to you, Professor Shirai, for about 6 minutes of opening remarks. Thank you.
Yes. Thank you very much. So I'd like to give a brief introduction about this CBDC issues to the retail sector. The next page, please. So recently, the central banks over these 2 years are increasingly showing interest in this retail CBDC. So there are various motivations for that. The first motivation is it was stimulated by the announcement by Facebook the Libra plan in 2019. And until this time, the many central banks in advanced economy really didn't take it seriously about this private sector issue, cryptocurrency. But I think Libra makes some differences because many central banks worry about this risk of currency substitution. The second factor is declining cash usage in Sweden, and especially after COVID-19, many people do not want to use cash. So central bank find it necessary to provide safe, low-cost payment tool alternative to cash. The third factor, which is quite important for the central bank for technical reasons, is that currently central banks in the world have a fast payment system, existing system. This is operated by central bank and the banking system. And it's becoming faster and low cost, but still there is some risk associated with this system. One is a point of failure problem because it's centralized system. And also there is some risk related to the failure of the counterparty. So compared to that, if we can use blockchain, it can be real time and immediate finality on settlement. So that will be the better technological advancement. The fourth factor is financial inclusion, especially in emerging economies and like China and Cambodia, because of the limited access to the bank account. The next factor is in the case of Cambodia, where US dollar is very much used widely. So they want to promote the use of domestic currency. So that is one strong motivation for the retail CBDC. The next factor is especially applied to the Bahamas case, where there are so many islands and the transfer of cash is not very practical. So for the geographical factors is another factor behind this popularity of a retail CBDC. Very recently, because of the seemingly very successful experimentation by China on this digital yuan, advanced economies probably find it increasingly threat. So probably this is one of the reasons why Bank of England, together with the UK Treasury, just made an announcement about the formation of the task force on this British version of the CBDC. Next page, please. Now, the central bank, when they issue CBDC, they can have a custom-made design. So they have to pay attention to the anonymity, interest rate, programmability, transaction cost, and then how much ceiling should be applied to the CBDC. Now, there's a growing consensus among central banks with regards to anonymity, because the central bank has to worry about the counter-terrorist financing and KYC is very important. So CBDC cannot provide 100% anonymity, so anonymity will be lower. About interest rate, at this moment, central bank want to charge either zero interest rate or low interest rate simply to protect the financial intermediation generated by commercial banks. As for the transaction cost, CBDC is supposed to provide free CBDC. And then as for the maximum amount available under CBDC, most of the central bank feel that some kind of maximum should be set. As for the programmability, I'd like to hear from other participants' view. I don't think there is a consensus yet as to how to apply programmability to the CBDC. Next page, please. Now, when we talk about retail CBDC, one can be account-based or another one is token-based. But account-based means central bank provide accounts to the big population is not realistic. So either going to the banking sector to trace the people's banking system, that's possible, but I think most interesting part of the CBDC is really about token-based. So using blockchain or something like, and at this moment, central bank already have some kind of agreement that if CBDC is issued, it should go through banking system rather than direct issuance. So it will be two-tier system. And then the CBDC is mainly using internet, such as mobile phone, but for low-income people, most of central banks are supposed to provide offline money. Okay. Next page, please. So right now, as you know, the Bahamas Sand Dollar and Cambodia's Bakong already the kind of CBDC issued. Now, it's very similar. Both are issued in 2020. The Bahamas case, this Sand Dollar is regarded as a legal tender, whereas Cambodia's case, the central bank does not really say this is a central bank CBDC. It's called Next Generation Mobile Payment. So at this moment, they have introduced system to facilitate the transaction among people and companies. But both are very similar because those currencies are issued in exchange for local currency or bank deposit. And then no ID is necessary up to certain amount of CBDC. And from a certain amount, then people usually should have bank account or some kind of ID. Both are at this moment used for domestic and not applied to the cross-border. And one other difference is that Bahama is providing offline CBDC, whereas Cambodia is not. Okay, next page, please. Now, I think everybody's paying attention to this China's that's issued by Central Bank of China, PBOC. It's called Digital Yuan, and it's possible to become a legal tender. And then we know that they are going to launch at the CBDC around the Winter Olympic, so means February next year. And already doing experimentation successfully from last year. And it's a two-tier system, and PBOC will provide both internet-based and offline-based for low-income people. And what is interesting is PBOC is already doing some collaboration with Hong Kong Monetary Authority about cross-border transaction using CBDC, and also this Hong Kong Monetary Authority, Central Bank Thailand, and UAE, together with BIS. Now they are working on this CBDC usable for cross-border transaction. Interoperability is so important, so it's nice for the central bank staff to work together. Finally, Bank of Japan just started to do experimentation from this month. I think still far away to go, but they will just technically, they like to check about the feasibility of CBDC in the context of Japan's currency issuance, distribution, and redemption. So they are going to check both token-based and account-based. Okay, thank you very much. That's all.
Great, thank you, Professor Shirai. I'm personally looking forward to having a go with the Sand Dollar whenever press trips to the Bahamas allow that to happen. But there we go. And we ourselves reported on the Bank of Japan kind of launching their I think 1 year experimentation. I think they launched that 3 weeks ago as well. And I think one theme of what you said is this momentum towards a two-tier system. So where the central bank is obviously the hub, and then they're using the commercial banks as the kind of distributors. There seems to be, obviously that doesn't have to be the way it's done, but there does seem to be kind of momentum towards the two-tier system, which is one of the trends you identified. Right, so we now leave Japan and we go to London. So John from Accenture, over to you.
Thank you. Great to be here. Thanks everyone for giving me the time to talk about CBDCs and what we've been seeing sort of in our developments with clients around the world. So if you go to the next slide. Yeah, let's go to the next one. Yeah, I'm conscious of the time, so I want to make sure that I want to start with just talking about sort of what we're seeing in the marketplace today. The work in the central bank space is intensifying, as was pointed out before. There's a lot of activity with different central banks. There's also a lot of activity happening in the US with the digital dollar, digital euro, the digital GBP. You may have heard a lot of these different sort of initiatives that are being sort of kicked off. And also the fact that a lot of it has pivoted from, it started off in the wholesale space, but it's pivoted into the retail space, which is quite interesting because it's addressing some key sort of requirements that I guess central banks are identifying around the world, including sort of declining use of cash and other sort of strategic imperatives why sort of, and looking at sort of retail. A lot of them are experimenting. A lot of them are close to implementing this. Now, this statistic is slightly out of date, but at the end, what we're seeing more and more is the trend is increasing and intensifying. A lot of experimentation has taken place, a lot of research projects, all the work in Canada with Jasper, Singapore with the Ubin, combination of those in Japan and Stellar, Intanon, Line Rock, all those COCA projects and everything else. There's quite a lot of activity that we see in this area. And what they're trying to do, of course, is answer some specific exam questions. And those were experiments pretty much. But now what we're seeing is sort of a concerted directional change into more implementation, which I think is also very interesting and also very encouraging in terms of the next wave of maturity in this space. And that takes us sort of into the technology sector. There's a lot of a number of vendors out there in the marketplace that are developing solutions in this area, and the whole ecosystem around the vendor space is maturing. The functional, non-functional areas, including sort of topics such as standardization and interoperability, are front and center of a lot of the discussions, and I'm highly encouraged by what we're seeing in terms of vendors and what they're doing. What I'd like to say, I guess, in terms of is sort of to talk a little bit more about the fourth column of this slide. It's really what we're seeing is sort of optimal configurations are emerging. We've looked at a wide variety of requirements, options, and solutions and approaches. And what we're seeing is sort of that wide those sort of requirements pointing us into specific optimal configurations that balance stakeholders, balance the alignment of those stakeholders. And again, that's non-trivial, but allowing sort of those to be implemented in an optimal design. And we'll talk a little bit about of that in the upcoming slide. Go to the next slide, please. What we're also seeing is sort of, I guess, as I mentioned before, the pivot to retail. And there is a lot of potential for overlap. I think if you, I sort of to simplify the story, if you do retail, you almost get wholesale for free, because in terms of the way that you can distribute this into the market, you can have commercial banks still interacting with each other through the CBDC that's being used in retail. So you also get a wholesale application or a commercial bank application of CBDC as well for free. What I'd like to point out as well is that there's a huge amount of interest in the cross-border space. That's where there's a lot of friction with regards to sort of payments today. And I think the CBDC, whether it's retail or wholesale, will play a key role in helping sort of reduce those frictions going forward. There's a lot of discussion around token versus account versus different type of implementations and so on. But at the end, what we see, as well as sort of the token, is the innovation behind it that allows us to do a lot of things that we weren't previously sort of capable of doing. And what we've seen in some projects is that, of course, that's an area that has a lot more interest for being able to address the sort of those kind of requirements. And the verdict is still not out yet. I think we need to sort of spend a lot of time talking about that a little bit more. But I would go back to what problem are we trying to solve first, rather than looking at the solution last. So I think that's also an important point. We also see a strong desire, and it's also our sort of champion model of the preservation of a two-tier model, where central banks distribute tokens to commercial banks who can distribute them to consumers. And that preserves the existing relationships that are there and mirrors the cash distribution cycle and distribution into the market. And I think that's also very important because I think that has a lot of value and benefit addressing things like AML and KYC and so on by virtue of using this kind of distribution model. We also see sort of this wide accessibility to consumers, enabling things like peer-to-peer payments, offline payments. And also one of the key drivers why we see central banks doing this is enabling sort of this sovereign national payment rail that is independent of commercial banks, independent of payment systems, but being able to use that in the social contract that central banks have with consumers as a means of payment for one another in all times, in the good and bad, in times of national crisis, to be able to distribute money, but also for people to be able to pay each other in a digital way. If you go to the next slide. So build that up a little bit. I'm going to talk very quickly about this because it's we call this our champion model, and why we put this up here is basically we talk about sort of the structure that we believe is an optimal one for a retail CBDC. We see central banks holding reserves of commercial banks in the second tier, as you see here, converting those reserves into an e-currency token unit, putting it into a safe, into a e-currency vault, and then consumers converting their deposits into tokens and then transacting with each other, with merchants, and so on. And then going back up the other way, sort of those tokens being redeemed back at the banks, and then being sort of converted back into reserves at the central bank. So this whole cycle that you see here allows this two-tier model, allows this two-tier distribution, and allows consumers to hold an endpoint at the endpoint, whether it's a wallet in a card or a mobile phone or what have you, at the endpoint to hold a central bank liability. And it mirrors the cash distribution cycle and cash in payments for consumers. And this allows them to also use that as a digital means of payment at the endpoints, whether it's a peer-to-peer payment between consumers or peer-to-merchant paying for groceries or what have you. And as I said there before, you almost, if you do a retail CBDC solution like this, you get the wholesale one for free. That's the red arrow going from side to side on that one. And I'll pause there. Thank you very much.
Great, thanks, John. Just a couple of comments from me for the worldwide audiences. One of the things I found so interesting covering this topic in kind of recent months are those names: Project Jasper, Project Ubin, Project Aber, just for some of our viewers who maybe haven't been following it quite so closely. I think these are the names that, for example, the central bank or central banks are giving to these, the kind of research and projects that they're doing. And it was very interesting what you're saying about the kind of pivot from maybe the more original interest in wholesale use. So that's kind of, I guess, within kind of the banking world, so to speak, and then the more retail use, which I guess is where we're focused today, which is for citizens, for the kind of general population. And I think it's that pivot that has taken this topic of CBDCs more into the mainstream. Here in the UK, we had the Chancellor Rishi Sunak tweeted on Monday, Britcoin. Some people may not like that phrase, but it's topical, and it's that kind of pivot to potential kind of consumer use that I think is kind of at this point kind of driving the interest, but also, and I'm hopeful we'll come on to this later, driving some of the potential benefits. So, for example, Professor Shirai talked to financial inclusion, and actually, obviously, the focus today really is on the kind of technical aspect. But just so the kind of viewers can be aware of ultimately what's the end outcome for this. It's for example, connecting with kind of unbanked communities. I know there's been kind of research done on that and financial inclusion. So ultimately, just so the viewers can kind of think of kind of what the ultimate end goal is, that's one of the things I kind of picked up so far. Just to find another point from that, I just encourage all of our viewers to fire in questions via the Q&A function. Thanks in advance for those. But now we go over to David from AWS. David, over to you.
Great. Thank you, Ian. Really excited to be part of the discussion. I think the issues that we're focusing on today are very relevant. As John says, the debate on CBDC has moved on to a new phase. There's still a lot of work being done on policy issues, but increasingly, there's more focus on questions of what a CBDC would look like in practice and technology options. So fundamentally, a CBDC solution does two things. It is a way of recording ownership of digital currency, and it provides a new infrastructure for citizens and businesses to make payments using CBDC. And so in designing a CBDC solution, it makes sense to learn from existing payment systems, such as RTGS and fast payments, or commercial payments networks like Visa and SWIFT. And this is all about technical performance at scale and delivering resilience and security, scalability, which are all features that underpin AWS's cloud services. The other key factor in designing a CBDC is the potential for it to act as a catalyst for innovation in payments and other financial services. So a CBDC solution can do that by creating an open marketplace, bringing in new providers, new services. And a CBDC solution can also make that happen by providing features which open up different ways to use money, like programmability, we mentioned earlier, and offline operation. Could I have the first slide, please? So these factors, technical performance and enabling innovation and new features, are what drive our central bank customers' thinking on architectural decisions and technology choices. And so to help provide some guidance to that debate, AWS has recently published 2 white papers on CBDC. For those watching, you can access those from the aws.amazon.com site. And probably top of the list of those choices that our customers are considering is the question of whether to adopt a distributed ledger solution using blockchain or a centralized database for the core of the CBDC system. And this question is something we've been focusing on in depth at AWS. So we've created our own reference architectures for how a CBDC could be delivered using some of those solutions. And we published one of those in the recent white papers. In order to move the debate forwards, we decided to choose a centralized solution using Amazon Quantum Ledger database. And the reason for that is that although centralized databases have the advantage of a track record of success over many years in commercial banking and RTGS systems, up until this point, central banks have published very little about their use for CBDC. So in contrast, there's been a lot of work on decentralized solutions, blockchain, such as the examples that Professor Shirai mentioned, Sweden, Cambodia, the Bahamas, and there's been a lot of success with those solutions. But there are still questions and issues on some of those solutions, such as the ability to support high transaction throughput and confidentiality of transaction data. And we're seeing a wave of innovation from our partners to try and address those issues. For both alternatives, we need to think about their ability to support the innovation and the new features that I mentioned earlier. So, for example, programmability, blockchain solutions have the potential to deliver that through smart contracts running on the CBDC system itself. Although implementing that in practice does still require further work, and that could add more complexity. An alternative way to deliver programmability would be as an overlay service from payment service providers rather than in the core CBDC system. And this is illustrated in the next slide. So this diagram is a kind of similar view to what John shared earlier, but although we've gone into a bit more detail about the different types of payment service providers. And this shows programmable money services and how they would interact with other service providers operating CBDC. The CBDC system shown here could be either a distributed ledger system or a centralized one, and the approach could work for either. The key enabler is the central bank providing protocols for interoperability and standards and regulation. And this is just one example of how CBDC could work by creating innovation through working with the private sector and creating the conditions for an ecosystem of payment service providers, as you can see on this diagram. And this is a core focus area for us that we're investigating with our partners and in our own proof of concept work. So one final point, there's a great deal of flexibility in what can be achieved with a CBDC solution, regardless of what technology choice the central bank makes. So, for example, it's software design and configuration which will dictate things like the limits on how much CBDC that a citizen can hold, or the balance between privacy and prevention of crime. So this boundary between what can be achieved through functional design against what is dictated by architectural solution choices is another focus for us.
Great, thanks, David. We've actually, while you were speaking, we've had there's a couple of questions have come in. I'm going to ask it now, because if I don't ask it now, then we may forget it later. But I think your slide was entitled there, interoperability, and the question has come in. I'm just going to drag this across to read it. What's your view about interoperability of CBDC? Is it needed? How would the implementation look like technically? Well, you were kind of just literally looking at that now. But then there's a second part of the question where the person asking the question has said, I mean CBDCs of different countries. So I guess that's interoperability in a different sense. I mean, David, you're welcome to answer that, or Professor Shirai, or whoever. Before we move on, of course, to Professor Milne's opening remarks, I don't know if anyone wants to already look at interoperability internationally, I guess. David.
Yeah, I mean, it's interesting because there are lots of different levels of interoperability. There's interoperability between service providers within the CBDC ecosystem, which is what I was focusing on. Interoperability between national payments networks. But yeah, I think in many ways, I think John alluded to this, maybe he wants to jump in, that interoperability between two different national CBDC systems to help remove frictions in cross-border payments is really interesting.
Yeah, I think off the top of my head, I think there are kind of live trials going on. For some reason, I've got Thailand and Hong Kong in my mind, but I'm sure there are various others as well. Professor Shirai, I don't know if you want to come in just briefly on international operability.
I just thought about first question. Somebody asked about first question. This volatility of values. Could I say something about it?
Yes, if you want. We do have other questions coming in as well. So, yes,
okay. Could I? Okay. So I think, Bitcoin, everybody knows the value, it's very volatile, but among cryptocurrency, there is a stable coins, and that is quite pegged to the US dollar. So there are diverse digital currency. The Bahamas case is very interesting because it's a central bank issued currency, but under the US dollar peg system, right? So it's similar to the stable coin, but it's a central bank versions. But anyway, central banks, as long as they have a reputation about the price stability, then value is very stable. So if the central bank issues central bank digital currency, still value is stable.
Great. Yeah. No, thank you. There's another question that's actually come into David. So I'm going to read that question out for David, but then if it's okay, we'll go to Professor Milne just for his opening remarks, and then we can return to this. So David, your name checked in this question, but question to David, wouldn't using a centralized database for ledger recording be more prone to hacking than a decentralized distributed ledger? Sorry.
Yeah.
So that's a... If it's okay, Dan, can we come to, I'll give you a moment to, if you, to think further, but if we can just go to that's the question that's come in, but if we can go to Professor Milne, first of all, if that's okay, just for his opening comment, and then David will come to you again for that. So Professor Milne, if I can come to you for your opening.
Thank you. Yes, I've just unmuted myself. Yeah. Thank you. So I'll say a little bit about myself and then tackle some of the issues. So I work at Loughborough University, a lovely Leicestershire in the UK, one of the most charming counties in our country. I've worked in this area of payments and technologies for, gosh, 20 years or more. And it's been fascinating for me to see how really quite narrow issues for most people about exactly how does money move from one bank account to another or one place to another have suddenly become such a core topic. I think I like to take a kind of almost historical perspective, and both personally and in terms of the history of money and technology. And so I'm going to start with a little story about myself, which I think will shed some light on what I hope to contribute to these debates. So I'm not quite as young as I used to be, a few grey hairs. And in 1982, I used to work in HM, it's nearly 40 years ago. I used to work in HM Treasury. I worked, my principal job there was preparing statistics and charts for Sir Terry Burns, who was the permanent secretary of the Treasury. And in those days, the Treasury, those are the bad old days where we didn't have an independent central bank. It was, we had a one-man monetary policy committee, and his name was Sir Terry Burns, and I was one of the small team that provided him with the data. Gosh, the world has changed. What did I learn from that? Actually, the world is a very simple place. When you're working for somebody like the permanent secretary of the Treasury, everything out there you've got a whole teams of people, and I was one of them, whose job is to simplify, is to make sure that the world can be properly understood. Why do I tell you that story? Well, since then, I've gone through a career of nearly 40 years where I've worked on macroeconomics, bank risk and regulation, and then eventually for the past 2 decades with a primary focus on banking technologies. And one of the things I've observed in the technology world is it's completely the opposite. What there are is many, many salespeople who want to make the world as complicated as possible, and they'll try and confuse you so that you have to buy something from them. Now, we need to find a balance there, and I want to, in the about 3 minutes I've got left, or 3 or 4 minutes, try and give you a very simple view of central bank digital currencies. Start with the simple, and then you can add the complications on after that. Next slide, please. So I think the first place to start is a definition of CBDC. And so there's a mistake in my slide. I should apologize for this. It should have read, so that debate is driven by application, not technology. I think this has already been alluded to. You've got to think about the use cases first and then think about the appropriate technology. But I think that's important when we're thinking even the very basic question, what is CBDC? So for me, CBDC is any widely held, digitally transferable central bank monetary liability. So it's not banknotes, because those are not digitally transferred, and it's not central bank reserves, because those are narrowly held by commercial banks. But anything that goes wider than central bank reserves then becomes CBDC. And I think it's very helpful to think about things in that way, because it rules out then any kind of essentially angel on pinhead debates about, is this CBDC or is it not? Second point, we need to focus on use cases. I think, again, that other panelists have focused on that. And for this session, it's particularly the retail use cases, a safe form of bank account, where there's no danger of the bank failing. The central bank can always create more money. Non-bank, probably mobile money for use in everyday purchases. And that's also obviously linked with financial inclusion. And I really like the point about geographical reasons why a country like the Bahamas with many islands would want to adopt a CBDC. And finally, in countries such as Sweden, where cash use is in retreat, as a cash substitute. But these are different use cases, and they may be different forms of CBDC. Again, CBDC is any widely held digitally transferable central bank monetary liability. There's no reason for them to be one of them. A central bank may end up issuing 1, 2, 3, 4 forms of CBDC. That's an interesting question to me. How many different types of CBDC? There's also the wholesale space, which I don't want to talk about too much. That's not the main focus. It's different, but it's related. That's about widening access to central bank liabilities, particularly to non-bank payment service providers. And actually, it's also about the nature of our financial markets and how at the moment we rely on margin-based trading, and everybody trades on credit and settles later. Even spot markets are actually settlement, typically T+1, T+2. And what we're talking about here is a change to everything being real-time settlement. And by the way, RTGS is not really real-time. It's just that you have to wait. The customer says pay now, but the bank has to wait till it gets the credit from the central bank. So it may be a matter of seconds or minutes, but we don't really have real-time payments at the heart of our systems. It's another simple point. Okay, so let me finish I've got about a minute left. The technology challenges. Again, I have 3 sub-points. It's our main topic. To me, the question of blockchain involves lots of distractions. And I think the key point here is that centralized ledgers can deliver everything pretty much just as well, user experience, security. I know there's a question about that, but pretty much as well, and arguably more efficient. So it's a secondary. It's not that centralized ledgers are inherently insecure. Let's deal with that question later on when we know what we want to do with CBDC. There's 2 big technical issues, I think, which I would emphasize as being core, which really haven't come up yet. One is identity. I think the technical challenge, and it goes far beyond central banking and the monetary system. It's all about e-government, is how do I know who I'm dealing with when I'm interacting virtually? And I think that's something which governments across the world are going to have to address. Estonia, of course, is the pioneer in this area. But ultimately, I think the full use of CBDC, particularly in advanced countries, is going to depend on us also addressing this identity challenge. And finally, okay, if blockchain is not the issue, what is it in terms of the actual technologies? Now, my view, which is written up in a current working paper, is the key issue is delegated audit and control. What do the new technologies allow you with any form of central bank liability? They allow you to delegate the control to a third party. Think of a wallet service that's used for Bitcoin, for example. And that, I'm pretty sure that's how this 2-tier is actually, in one sense, it's going to be both 1-tier and 2-tier at the same time. It's going to be 1-tier because CBDC ultimately will be money held in the central bank, linked to an identity where you will be able to access it at any time. So that's 1-tier. But actually, who manages it? Who does the accounting? Who onboards? Who provides the banking statements? That'll be a 2nd-tier. It'll be commercial banks, but it'll be non-bank providers as well. And they will be granted, through cryptographic security, delegated control. And once you look at delegated audit and control, actually, it's amazing what it opens up. The failure of an institution like Lehman Brothers could be a push of a button, provided you have delegated audit and control of all the assets and contracts which a particular entity. But that's a side issue, something to go into another time. So that's my summary. Actually, things are much simpler than many people pretend. Focus on use cases. The key challenge is identity, and we need to think about delegating, holding the money centrally in the central bank, but using the very powerful available modern techniques for delegating audit and control, because we as, if you're as bad at computers as I am, and I think I'm not untypical of many citizens, you don't want to have huge responsibilities for managing accounts yourself, but you can delegate those very effectively to third parties, which to the user will appear just like a bank. That's the end of my remarks.
Thank you, Professor Mill. I mean, again, just to set that wider context, I suppose When we deal with cash, for those of us who still occasionally carry cash, it is anonymous, and these questions of ID and all the other things that have spinned off don't really crop up. Whereas obviously going digital with anything, but including central bank digital currencies, brings in the identity agenda. So I'd like to, I'm sure all the panelists want to come in on what all of you have said, but I said I'd go back to David first of all. So David, the question again that came in was, the screen is just scrolling, but do you think a person holding digital currency in a bank has more protection than someone who holds only old style currencies on their account? Oh,
that's a different question.
No, sorry, the previous one, wasn't it? Yeah, wouldn't using a centralized database for ledger recording be more prone to hacking than a centralized distributed ledger? The person who's asked it has actually then asked supplementary, please ask that as a question to the whole panel. Wouldn't a centralized ledger run by a single technology third-party company give too much control and influence to a single organization? So similar-ish. So if I can go to David first of all for your reactions on all of that, and then I'll go to John if that's okay. So David, over to you.
Yeah. Okay. Well, it's obviously a really important question. A CBDC system will be critical national infrastructure, and so security, resilience are absolutely fundamental. I understand the point that if you have a centralized system, then the danger is that if that system is compromised, then you potentially lose all functionality. I mean, obviously, that's why in centralized solutions, existing ones, like I mentioned, learning the lessons from RTGS, for example, we have synchronous replication and an automatic failover. But the point about vulnerability to attack is also about the attack surface. How many different points would an actor have to potentially compromise? And one issue with distributed ledger solutions is that you have a network of nodes, and you have a challenge to maintain configuration control of what's the software and the hardware running in each of those nodes. Potentially, you're increasing the attack surface and creating more vulnerabilities.
Thanks. It was interesting that in the Bank of England, what they put out early this week on the CBDC technology forum that they're establishing, the issues that the Bank of England said would be considered: ledger design, point of sale hardware choices, the user journey, data security, API standards, and functionality of online payments. So it's interesting that actually between what you said, David, what Alistair said, and what the others have said as well, that we've kind of touched on already kind of all the issues that I think the Bank of England CBDC technology forum will be looking at. But John, I'm sure you want to come in on some of the things that have been said so far.
Yeah, and of course, this is a key consideration as well. If it's a public utility, which central bank money, of course, is, and you expect sort of people to use it in times of national crisis, and depending again on the requirements of why you're developing a CBDC as opposed to other forms of digital money that's already out there and already being used. So if it, and this is, again, it goes back to sort of the business considerations or the requirements, and some key requirements that we see are, we want a parallel payment rail in times of a national crisis where electricity goes off, internet goes down. We need to be able to allow people to still transact with one another. And I think that's also one of the design considerations, and when we said about optimal design considerations. And this is where technologies like DLT with offline capabilities spread that around. So you're able to then transact with one another peer-to-peer, even if a centralized system goes off. You don't need any centralized system to transact these these exchanges. And the more nodes you have, the more resilience you allow. And even if that is not available, then you also have offline payments to enable that to transact regardless of whether you have any online capability. And this is, again, it goes back to the heart of what problem are you trying to solve? Are you creating a payment system? Are you creating a digital or a different format of cash? different format of money. And it's a long debate as well, right? Because it's not obvious sometimes. You start off with one conversation and you end up, well, it doesn't mirror what a payment system does today. Well, it's not meant to, because it's supposed to be doing something else that's different. And again, it's a long debate about that. So I think that the centralized systems have a fundamental challenge, but if they're not meant to address sort of always kind of offline or requirements in a time of sort of an outage or whatever, then it's perfectly fine. If it is, then it's not. Then you have to deal with it in other ways.
Thanks, John. Just so maybe I understand on behalf of all the viewers as well, when we're talking about offline use, what precisely are we referring to? Are we referring to, when I think of offline use now as a consumer, I think, oh, I'm not in range of a signal with my mobile phone. I guess that's mainly what we're speaking about, but I think we're also talking about, it taps into the resilience argument of if suddenly a lot more people, I guess this applies to wholesale too, but who are suddenly transacting in a digital currency, and there's a system, as you describe it, a system outage. That's a much more critical and fundamental concern than someone who happens to be in a particularly remote area. I don't know if anyone wants to, I just want to kind of make sure.
Yeah, it's sort of the same problem, right? I think in many respects, if you design it in a certain way from a consumer perspective, the consumer experience, the end user experience is that they can continue to transact. And then when online capabilities are back up, for instance, the network is back up or whatever, even if you're out of range or if it's down or out or whatever, then you go back and you reconcile and you do what you need to get yourself back up to a sort of a reconciled state. The offline capability, even from a system outage or network outage to the end user, is the same thing. He doesn't know or she doesn't know whether it's because of a backend system or because of the network's not available. All they know is that it continue to transact, and the transaction is complete, and you're not double spending, and you're not not doing all nefarious things with the money, as at the end of the day, which is the important part of that.
And are the technology solutions robust enough already? Clearly, CBDCs aren't particularly live yet. I mean, there's the trial in China, there's the Cambodia, Bahamas, etc. examples to an extent. But clearly, to an extent, we're some way off a lot of countries committing to a CBDC, and then there'll be some years beyond that before some of them actually go live. Is the resilience of the potential technology solutions ready now, or is that something that's going to have to build? I'm sure David probably wants to comment on that, but I welcome any reaction to that.
Yeah, well, I'll start, and I think we've always looked at it in building solutions like this. We've always looked at it in the sense of understanding, what are the uptime requirements, what's the resilience, what's the scalability, how can you have a certain number of transactions per second, and everything like that. And in our designs, we've always been very, very careful to take those into consideration for the system that we're building. And of course, that is in our sort of experimentation belief, and also in our sort of implementations, what we've seen is we haven't seen any sort of barrier to stop us from being able to deploy such a solution. So I think that the sort of that isn't a consideration at the moment for us. I know there will be other challenges that we will face, and as you sort of grow into larger markets or more transactions or more throughputs, again, there are ways to scale this in a clever way. And if you have this horizontal scaling capability through a different architecture, then that gives you that kind of robustness and performance that you need as well.
And if I may add a brief remark, offline's a problem that's already been solved and was solved some years ago. The question is, do we need a better solution? So experiments at Mondex, it never became a fully kind of rolled out national digital payment solution, but that was an offline functionality. Things like transport cards, like Oyster Card, have built-in offline up to certain limits. So we've been working with offline transactions for a couple of decades. The question is whether the solutions that work have worked in practice, whether they're still scalable enough, what's going forward. And it's not to do with central versus decentralized, because if you're offline, are you updating a decentralized register or are you updating a centralized subsequently?
Thanks, Alistair. David or Professor Shirai, I don't know if you want to come in on this topic of resilience and offline. Professor Shirai.
Yeah. So about offline, when we look at the case of Bahamas, offline, this card system can be used for the people who want to maintain privacy. So central bank can offer this kind of card system without checking identification, right? So that is one, I think, a way to use it.
Right.
Yeah, if I chime in on the offline question. I mean, one of the things that people talk about in the context of offline is the potential for it to be anonymous, like cash, and that's potentially an attraction. You know, one of the features that might, in some ways, help with financial inclusion or reduce barriers to people taking up CBDC. But I think it's worth saying that it doesn't necessarily have to be anonymous. It is possible that the system which supports offline payments, you know, which could be through a secure operating environment in mobile phones, for example, could be transacting and yet recording details of the identities of the parties in offline transactions. And then when the CBDC is essentially kind of checked back into the online system again, that information could be then shared, or a limited part of that information could be shared with the central bank or other parties.
Yeah, I think we're on the topic of regulators being able to control the privacy and anonymity of the kind of CBDC architecture, I guess. So on to more, I suppose, a regulatory question. Professor Shirai, again, I see you nodding along to, I maybe caught you by surprise, nodding along to what David was saying, but that's okay. Well, one thing we were looking to discuss then specifically was privacy, which is exactly kind of where we've landed now. Here in Europe, the European Central Bank ran its biggest ever number of responses to a consultation on the topic of a potential digital euro. It's probably a few weeks till Frankfurt announces whether they're going to proceed with kind of deeper experimentation, but I think they had more than 8,000 responses. Germany was the country who provided the most responses, came from Germany, and the most requested feature of the CBDC was privacy. So I guess one of the broader questions we're asking is the extent to which the technology choices made by a central bank, if it chooses to introduce a CBDC, is important for that privacy question. I don't know if John or Professor Shirai, Alistair, they want to kind of again pick up on, if the number one demand of citizens or people responding to consultations is to ensure that their digital cash is privacy, is the technological question, and does the technological decision, is it important to that question?
I agree. I think it's it also is a very I just wanted to make an initial statement around the privacy topic, because we were actually discussing this even yesterday with some colleagues. When you look at privacy, the requirements vary significantly by different sort of jurisdiction or country that's looking at sort of a CBDC implementation. In Europe, it is an extremely it's a high requirement, of course, but even within sort of the European Union, you have a variation. In the Nordics, it's less of an issue or less of a challenge, rather to have a detailed privacy embedded in the solution, whereas in the Euro system, it's much more of a requirement. So even within certain jurisdictions, you'll end up with a high variation on the topic of privacy. Having said that, though, that's also what we talked about in terms of in the presentation about sort of some of the key considerations in the requirements, because if we end up in a situation where we have we've deployed a solution that sort of fragments the transactions in a certain way, then you end up with not everyone seeing everything happening all the time. That's what you don't want. So in a big centralized system, you end up with one party seeing everything, maybe nobody else seeing it, but one party seeing everything. Whereas in a distributed system, you end up with only the parties that are involved in the transaction that actually see the transaction happening. And that's a distributed model, which I think is quite effective in preserving sort of the client bank secrecy that's already in place. So if I'm sending sort of funds to you, my bank knows, your bank knows, you and I know, but nobody else needs to know. And I think that there's a preservation of privacy just by default in the architecture there.
Yeah.
And then you can layer other things on top of that as well, like zero knowledge proofs and other things to enhance it, and also other things to sort of limit the amount of data that's shared.
Yeah, privacy goes beyond binary choices of anonymity or full disclosure. It depends what decisions. And yeah. I want to move on move back to AML actually, because it's another obviously very important topic that I guess the tech plays a part in. But before we do, I just wondered if anyone else just wanted to come in just on that question of the tech, how important the tech choice is to the important matter of privacy.
Just a very brief comment from me is that I think this relates to my point about multiple CBDC. So if you look at the cash replacement, the challenge in Sweden, they might, for example, go down what's more like a smart card route for that purpose, where these would be anonymous if you lose it, or it could be stored on your phone. But then there could be a separate CBDC, which is and there will be transaction and stock limits on the smart card. So I think it's tailoring a number of specific solutions ultimately to meet needs.
Yeah.
Yeah. Just one further point to kind of chime in. Yeah, I mean, clearly there is the potential that the technology choices you make may limit what you can do. But I think, as I was saying earlier, there is still a lot of flexibility in what you can achieve. I mean, John's exactly right that there are benefits inherent in distributed ledger, in the way in which they operate, and certain solutions, transactions only involve, the participating nodes of, the two people that are operating in that transaction. But it is also the case that you can configure a centralized solution so that the center doesn't know the actual identities of any of the parties, and only the bank that's working on behalf of the participants, knows their identity.
Yeah, and I'm going to come, if that's okay, next to Professor Shirai, just on the privacy point, because as John alluded to, every country's citizens, I guess, have different expectations and views of privacy. To give an example from Asia, obviously China is very well progressed with its trials of the digital yuan. It's almost, there seems to be a daily update on different things being trialed. And impossible, of course, to summarize the view from a diverse area such as Asia in simply, but I just wondered if you could at least have a go at giving your perspective from Japan on how the technology side and privacy could work with each other.
Well, I think the privacy things is quite difficult to guarantee when we think about central bank digital currency, because because central bank always have to worry about reputation, right? In case some data problem happen with the anti-money laundering and terrorist activity, they cannot make mistake. So I think, for example, case of ECB's result on a public consultation, people like to have a privacy, but I think, central bank always have to make sure they don't make mistakes. So I think, they have to compromise this privacy. And then they have to put more emphasis on providing universal access to the money. That is more important, universal access, that everybody has access to CBDC. Therefore, they have to also pay attention to offline as well as online.
Yeah, It's interesting. It just made me think as you were speaking there, or maybe crossovers with the COVID passports. Even now, it kind of enters in. One of the things is it has to be universal. If we're introducing a digital currency, but one of the benefits is we've alluded to before, is potentially helping with unbanked communities to have access to cash. Right. Well, I'm looking at the stopwatch, and we have 10 minutes left. So I want to kind of ask now a final question to you all. And if we handle this quickly, hopefully there'll be an opportunity at the end for everyone to just make a kind of a broader kind of closing remark on the next steps and kind of what we've learned so far. But I have 3 questions for you all, which are what our audience, I know, would love to hear is one prediction for CBDCs over the next 12 months. So obviously we've looked at a whole load of different kind of subtopics within the tech side of CBDCs. If you had one prediction for the next 12 months, what is it? We've taken in a lot of countries so far today, from China to the Bahamas, but one country or region that you think is going to be interesting to watch on this topic over the next year, and why? And then also, finally, whether you think the introduction of a CBDC in most countries is a foregone conclusion. Is it going to happen? As I say, there's a couple of live examples now, but the digital dollar is in its kind of very early stages. The digital pound, similarly, we've mentioned the digital euro, etc. The Bank for International Settlements have said central banks collectively representing 1/5 of the world's population are likely to launch retail CBDCs in the next 3 years. So that's almost the official view from the Bank for International Settlements. I don't know who to go to first. Let's go with the order we started in. So Professor Shirai, we'll go in the original order. So Professor Shirai.
Yeah. So everybody knows, by next February, China is going to introduce this CBDC, not to the nationwide, but in the major cities to coincide with the Olympics. So we know they're going to do it. At the China's case, it's interesting because they say they don't use a blockchain-like, because I think they have a so huge number of transactions. So which is not, the blockchain is not suitable. So technological wise, I think it's very interesting. As for whether the CBDC will be really implemented in many countries, I think there are differences between advanced economy and emerging economies. Emerging economies always have a financial inclusion issue. And also they want to develop financial center, right? They want to catch up with the fintech. So there are strong motives. But in advanced economy, except for the Nordic countries, Nordic countries, the cash usage is dropping, but many other countries like United States, or Japan, or Europe, cash is actually growing after COVID-19. Not for the settlement reason, but because people want to keep it as a precautionary purposes. So there's lots of cash, and there is no strong demand from the people on the CBDC. So, and also central banking advanced economies, they have to be worried about their status. Their currencies are international reserve currency. As I said earlier, they cannot make mistakes. So they have to be more cautious compared to the central bank in emerging economies. So the likelihood of seeing CBDC among central banks is, I think, more challenging.
Thank you. It's a very interesting point that, for example, your own country, Japan, has really only just started this kind of its first experimentation now, whereas Sweden, I think 4 or 5 years ago, which is kind of well known for its very decline it was the decline in cash use that almost triggered Sweden's exploration initially. So it's a good point that everyone's at a different part of the journey. Right, if we go back to London then and to John for those 3 questions.
I think prediction number 1 around sort of, I see in the next 12 months, wholesale application of CBDC in production. I know we've talked a lot about retail, and the focus has been around retail, but this journey started in many cases, in almost all the cases in the wholesale space, and I think that it will. There's a lot of I guess frictions and cross borders and payments topics that sort of CBDC addresses, and I think in the wholesale space, it's more straightforward given the known parties that you're dealing with to implement something like this. And I think that that's a pain point that needs to be addressed. And I think wholesale in production is going to be one of the things. Although if it's 12 months or not, I don't know. I'll look back in a year's time and see how far off or on we got in the target. But I think at the end, I definitely see that there's a lot of activity in the wholesale space. And I think it's going to be an area where it will come out. Country or region, I would say to watch. And I've said this a while ago, and sort of quieted down, but I think it needs to, I think I would reinvigorate this. Apart from all the stuff that we're hearing across Europe, Asia, America as well, the region to watch, I would say, is the Middle East. There's an incredibly diverse set of countries, different currencies, some of them pegged to the dollar, other ones, and a lot of bilateral trades between all of the countries. And there's a significant motivation for being able to use a different format of money in order to transact more efficiently. And I think that whole region has a lot of attributes that I think are very interesting from a CBDC implementation. Retail, wholesale, probably wholesale, but regardless, I think it's CBDC in general. I think it's going to be very important to focus on that region. And inevitability of a CBDC implementation, absolutely. I think it's not a question of if, it's more a question of when and how it will be rolled out and adopted, and dealing with all the interoperability issues and challenges that we all have to deal with as well as part of that.
Thanks, John. It just reminds me, even though it was my own question, that Benoit Corre from the Bank for International Settlements and others have said it's not a race, of course. So we should make it clear we are not encouraging as the leaders of the major central banks say, better to be cautious and get it right than be quick and get it wrong with anything. I think we've probably got certainly a minute each for it's David next. So David.
Sure. All right, I'll try to be quick. So one prediction for the next 12 months. I think we'll see an explosion of interest from the established FSI companies, commercial banks, and so on. Partly the CBDCs potentially disruptive to them, but actually more because of the opportunities that they have to play a part and offer services in a CBDC world. Area to watch, I think it has to be the Eurozone. The announcement's coming up so soon, and I think it's important because obviously it's a large economy, but it's also very influential, and they also have a lot of experience to draw upon in terms of fast payment systems and the maturity of the relationship between the state and the commercial FSI world. And then finally, is it a foregone conclusion that all the major economies will introduce a retail CBDC? I'm reluctant to say that. I think the one thing that may impact, at least in some countries, is that central banks are also now looking at how to regulate commercial private stablecoins. And it is possible that they may decide that some of the objectives of CBDC could be achieved through that route.
Interesting. On that note, I want to say, take this opportunity to say thank you for the people who've asked questions that we haven't been able to answer. We did have a few on the kind of more crypto side and the kind of private bank side. I've tried to kind of keep us focused on the central bank side, but I just want to say thank you for those who have mentioned that aspect of the debate. So, Alistair, we have a minute for you, if that's okay.
I think I'll do my best. Firstly, the next 12 months, well, my view of this is that in the developed countries, I think it's going to be the wholesale, as has already been said, where there's going to be a lot of movement. And I think that's because they'll think retail is just too complicated, all these privacy and other issues. In low and middle income countries, I think they're also going to think along similar lines, but come to exactly the opposite conclusion. Wholesale, that's just too complicated and difficult. But retail, I can serve my citizens. So I'm seeing CBDC retail as being a low and middle income first mover. In terms of jurisdictions to look at, well, let me put in a plug for Southern Africa, where I've lived for a few years and worked for a few years. Interesting thing about the M-Pesa as a pioneer of digital mobile money in Africa, it's not as widespread as many people think. It's been a big success in Kenya, Rwanda, and there's been some uptake in places like Ghana of similar systems. But for political and other reasons, central banks and politicians have been very reluctant to embrace that sort of technology across Africa. CBDC is the opportunity for that to happen. Is it inevitable? Yes, under my definition of CBDC being anything widely held, digitally transferable central bank monetary liability, we will see much greater access to central bank money. That's inevitable. Technologically, how it's done, that's a very open question.
Great. Well, we set out 75 minutes ago to answer that question, so we'll have to reconvene at some point for part 2 to see how this has developed. But we're exactly on time, so thank you everyone for your conclusions. Very interesting. Thank you to our knowledge partner AWS for your support to make this webinar happen. Thank you to our worldwide audience for watching. And as a next step, this has been the recording. We've made a recording of this, which will obviously go out to all of those who've registered for the webinar. There will be a write-up published on global government fintech after the event as well. My understanding is about 15 minutes ago, everyone registered received a feedback form. So we do take those very seriously. So thank you in advance for those who've got time to complete it. Thank you again to our panel. Thank you again to AWS, and have a good rest of the day. Have a good evening if you're in Tokyo. Thank you very much. Goodbye.
Thank you.
Thank you.